So here goes. This is our US GDP preview, US GDP explanation. Okay, explain. What is GDP? That's gross domestic product, basically how much the economy is worth. The basic calculation is consumption in the United States. It's a huge part. It's about 70% of the economy. Okay, immediate consumption, investment, more long-term expenditure, government spending, and the value of exports minus imports. This is sort of the classic definition. The formula, Y, I mean the total output is C plus I plus G plus X minus M. If you ever see that, anyway, here it is. What we're interested in is not the actual GDP, which is about 16, 17 trillion, but the change, the growth rate, okay? How much has it changed since last time? And here, things can be a bit confusing because calculations are different. In the United States, GDP is measured in annualized terms. That means it's a change in the output this quarter as if it were the full year. So for this month, for this quarter, it's a quarterly figure in the United States, like in most places. We're expecting an annualized figure of 2.6% on Friday, okay? In places like the UK, and we have the UK figure released today, this would mean 0.6 quarter over quarter. It's more or less a multiplication by 4, okay? This is not a year over year figure, like in the one released for China, for example, not the change between Q2 2016 to Q2 2015, but rather the figure this quarter multiplied by 4, okay? More characteristics of the GDP in the United States. In the United States, as you probably know, they really love statistics, which makes things more fun, but sometimes more confusing. It's released 3 times. There are always big revisions. The first release is around the FOMC meeting. Really, this is something to watch out for. So if we have the GDP released this Friday, we have the FOMC also this week. The Fed will have, this evening, they will have the GDP figures, okay? So watch out for, forgot to mention it in the previous preview, that if you see a hawkish statement from the Fed, it could mean GDP is good. If you see a more bearish statement, it could mean that GDP is weak. Anyway, the first release is the most important one, has the biggest impact on markets. This one is released alongside the Fed decision that does not have a press conference. That means in January, April, July, and October. Okay, it's always this way. And then in the following month, we have another revision. Okay, we have at the end of August, for example, we have the first revision or the second release, and then the third and final just before the next quarter ends. That means in this case, we'll have at the end of September, the end of Q3, the final figure for Q2. But note that this specific release in July features a multi-year revision, okay? That means they're taking in once a year, they look back at a few years backwards, try to understand where they went wrong and do some multi-year revisions. This could add to the confusion. Usually these revisions are not huge, but they add to confusion, okay? Now, let's dive into GDP. GDP, we talked about how it's released and what it means. In the US, there is good GDP and bad GDP. Good growth vs bad growth, okay? What's good? The good, bad, and the ugly. So good GDP is consumption. When people are buying more stuff, that means they are more confident. And that's also the biggest part of the economy. So that's something we should look out for, personal consumption. Another figure to watch out for, even though it's much smaller in the United States compared to Germany, for example, or China, exports. Basically, the more a country exports, that means there's demand from other places in the world. And this could turn into a virtuous effect. Okay, so that's also good growth. Third good growth is investment. More investments, more hope for the future. If a company builds a new factory or employs more people, or I don't know, things like that, it's and also has a virtuous effect, hopes for the future. Of course, when these three figures fall, it's all bad news. It's a vicious cycle, a vicious effect, not a virtuous one, okay? What kind of growth is bad growth, okay? When we have government, I mean, more government investment, that's seen as temporary, and that's also frowned upon in the US. The US is more based on of course, private sector, especially in comparison to France, for example. So any rise in government spending can be stopped later on by Congress, or anyway, it can be temporary, and it's not the right kind of growth. Another bad kind of growth is inventories. Basically, what goes up must come down. So if there is a build in inventories, if storage is filled up, that means that in the next quarter, it could be depleted. And the other way around. So if we have relatively low growth, but because of a fall in inventories, it's not such bad news. Okay, so same goes for consumption. And if we have good growth, but consumption is weak, not led by consumption, it's not such good news. Okay, of course, the headline figure is the most important one, but then there is a second reaction that markets look into the components of growth. Okay, and let's continue. Yeah, in general, these are the latest figures to give you some proportions about US growth. Since 2013, we're not going all the way back to the crisis. Things look a bit crazy, okay? I mean, relatively volatile. So we have begins with, in this chart, 1.1 in July 2013, reaching a peak, well, falling to contraction early in 2014. I mean, a chance of a recession. Recession is 2 consecutive quarters of negative growth. It means contraction, and that's officially a recession. We had only 1 quarter, and then we had a big bounce, 4.6, 4.3, and then also had a slowdown, a very poor quarter early in 2015, then a bounce. Last 2 quarters were quite poor, 1.4 and 1.1, and now we're expecting 2.6, a bounce back in growth. As I said, US data looks good. So we are seeing lots of volatility here, but once we look at annualized growth, sorry, not annualized. That was annualized what I showed you beforehand. This is year over year. If we look at year over year, the changes are not that big, okay? So, okay, in 2013, it wasn't that strong. It gradually 2.5, 1.7, 2.6, 2.9, and recently around 2%, 2.1. Basically, what we are seeing here is what Christine Lagarde called the new mediocre. Okay, 2.5% annualized growth, sorry, year-over-year growth is not that good. Okay. Anyway, for this Friday, we're expecting 2.6, a big bounce. As I said, retail sales look good, other figures look good, but the first release tends to have the biggest chance of surprise. That means I will say in general that if we have under 2% annualized growth, it's bad news for the US economy and for the global economy. And if we have above 3%, it's an acceleration, it's good news. I am with market expectations, expecting this new mediocre of 2.5 or something like that, maybe closer to 2%, maybe a bit of a disappointment, but not, anyway, nothing earth-shattering. GDP figures have become a bit boring. Maybe boring is better because we don't have a boom and then we don't have a bust, but anyway, it's not excellent stuff. Questions here. If the Fed, okay. Yeah, Lucas says if the Fed is dovish and BOJ under delivers dollar yen back to 100, yes, that's certainly possible. I would say the Fed will be cautiously dovish and the BOJ under delivers. It's something that I see as more certain. Yeah, we could see a collapse because the recent rise in dollar yen has been fueled by expectations of big stimulus in Japan, and there is a good chance of a disappointment in Japan. Okay, I will leave the the Fed will rock markets, but they'll leave the bigger show for the REN for the Bank of Japan. It says problem is GDP is calculated with different formulas used by different countries, so it's not comparable really. China changed formulas a few times in the last years. Yeah, I agree. I would mention that here in Spain, a few years ago, they added illegal activities such as prostitution and drugs to the calculation. As these are illegal activities and nobody pays taxes on them, I don't know how they're measured. It's an estimation. But anyway, this makes GDP look bigger. Clearly, these are activities that happen. You can't deny them, and they are economic activities. But anyway, yeah, it's hard to compare. What we should compare is not levels of growth in different countries, but within the countries. Is the trend improving or deteriorating? Are we in growth or in a recession? Is growth accelerating or decelerating? These are more important figures to look out for.